Good day. Welcome to our lesson on how to develop a business plan. Today we are talking about variable expenses. Variable expenses are those expenses that a company or an organization incur when they are operating. So unlike the fixed expenses, variable expenses are dependent on the activities that the business is conducting. So variable expenses are the expenses that as your activities or your revenue in the business increases or goes down, the expenses will follow the same pattern. So it will be like a cost of goods that you supply. Let's say you are in manufacturing. Your variable cost, one of the main variable costs would be cost of goods and services that you're providing. So as people buy your product, you need to buy the raw material, or you need to buy those goods and services that you are selling. Depending on the activities of the business, your variable expenses will follow the same curve as your revenue. So when you're budgeting, you need to understand what are the variable expenses in your industry that you should take into account when you're doing the budget. In terms of the business, most expenses will be your variable expenses. For example, it will be like as I said, your cost of material that you're selling, that becomes variable expenses. Your commission on sales, because they will follow. The higher the sales, the higher the commission. And sometimes even some businesses have their marketing expenses linked to the revenue. So the more they produce, the more they pay cost on marketing, because sometimes it doesn't make sense for you to treat your marketing expenses as fixed, because you wouldn't be able to see if those expenses are generating you the revenue that you need. So you must take your marketing expenses as a percentage of your revenue. Let's say you allocate, maybe depending on the size of the business, you allocate maybe 1% of your revenue to marketing. Depending on how much you are achieving in revenue, then the budget will follow. So the higher the revenue, that means the higher the marketing expenses. And the other ones are like your distribution expenses. The more you deliver your goods and services to your customers, the higher the cost will be. But if you are not delivering anything, then the cost of the goods and services will be zero. Another one is electricity. Yes, for the offices, you still have to incur electricity, but for your plant, for argument's sake, or for equipment, if you are not running the equipment, there is no electricity that you are paying. But if you are running the equipment to produce your goods and services, then you'll incur your electricity expenses will become higher. So in terms of revenue expenses, these are expenses that follow your revenue. The higher the revenue, the higher the expenses. The lower the revenue, the lower the expenses. So you need to be able to identify which variable expenses are applicable in your space so that you can budget them accordingly. The most important thing that you need to know when you're budgeting for your revenue expenses is what is the percentage of that expenses to your sales or to your revenue. For you to produce maybe R1 of sales, how much do you have to incur in your variable expenses? For instance, for electricity, for you, let's say if you are in a manufacturing or you are producing goods and services, you need to know what is the cost of electricity for you to produce. Maybe let's say you produce 100 items. How much does it cost you? So once you know how much does it cost you, you take that cost, you divide it by the revenue that you're going to make from those products that you produce. Then you get a percentage. Then that percentage, you need to use it to calculate your variable expenses. So as you project for your revenue, you take that percentage, you multiply it with the revenue figure, then you get the expense that you're supposed to budget for. So consistently, when you're doing your budgeting, budget it accordingly. And as well, and when you're doing your management account or when you're managing your finances, you need to monitor the percentage of that expense in relation to your revenue to see if you are managing that expense accordingly. Because sometimes you might know that in the industry, let's say to produce a laptop, they spend maybe 100 rand on electricity. But in your business, if you are monitoring the trends, you might see that maybe you are spending 200 rand, which is higher than the industry norm. So that will help you to manage those expenses. You can investigate to see, why am I spending 1% of my revenue on this while the industry is spending, let's say, maybe 0.5%. So with variable expenses, they help you to monitor your costs, because remember, you're in business to make money. So as an entrepreneur, you need to make sure you limit the expenses as much as you can. So if you have, in terms of your business, most of your expenses are variable expenses, you will be able to monitor those expenses in relation to your revenue. There must be a certain percentage that you budget for, and then as you're monitoring how the business is performing, you will be monitoring the expenses using the percentages. It's different from the fixed expenses, because the fixed expenses are not linked to revenue. So you pay a fixed amount. It doesn't matter how much revenue you are generating. So with the variable expenses, you will be able to monitor in relation to the sales. The more you generate the sales, the more expenses you're going to incur. The less you generate or less revenue, then the less expenses you're going to incur in terms of variable cost. So variable cost make it easier for you to do the budget, because you are budgeting your expenses based on the revenue. It's a percentage of the revenue. And then even when you are monitoring how your business is doing, you are monitoring your variable expenses based on the percentage that you had initially budgeted for. If that expenses is got a higher percentage than that you are budgeted for, you need to investigate what happened so that you can manage it. How can you control it? But if it's lower, maybe you might have made a mistake in your initial assumptions. So when you do your budget, make sure you understand the percentage of your revenue, of your variable expenses in relation to your revenue, so that you can budget your expenses accordingly. Variable expenses are the important component of your business, because they will help you understand the profitability of your business, be it a gross profit or net profit. So you are in business to make profit. So with the variable expenses, you need to know, if you know the percentages in terms of what is the percentage of these expenses in relation to your revenue, you'll be able to monitor that, you'll be able to manage your expenses. And as a result, if you are managing expenses, then your business, you will be able to manage your business profitability. That's critical for entrepreneurs to understand what is a variable expense, how does it behave in relation to the revenue that I'm generating, and monitor that behavior to say, is it a consistent percentage or does it fluctuate? And if it fluctuates, or if it's more than the industry norm, you investigate and you decide in corrective actions that you're going to take. Now we're going to go into our case study movies to just explain a little bit more in terms of how the variable expenses behave when it comes to different type of businesses, so that we can give you a more practical example. Enjoy the video.
Variable expenses. Organizations have variable costs such as costs of raw materials, commissions, and transport costs. Variable expenses are expenses that fluctuate based on the fluctuation of revenue or production. If revenue or production increases, the variable expenses will increase in line with the revenue or production, and vice versa.
Main variable cost for AEY is the commission paid to employees who secure a contract. AEY pays 30% of the profit of the contract to the employees that secure the contract. This is massive, and it motivates employees to work hard. The other main variable cost for AEY is purchasing a product required by customers and logistics costs to deliver the products to customers.
The main variable expenses are travel expenses. Oakland A's made money by playing matches. Teams have to travel to matches as part of its operation. If they did not travel, they will not play. Therefore, it will be a bridge of the league requirements and not generate income. Billy made players pay $1 for their soda at the club. He understood the concept that small item budget requests are often a source of waste. Complete the assignment. Compare how the topic is addressed in the 3 movies and rank them according to your preference on how the characters and the organizations dealt with the topic and motivate your ranking, 1 being the best and 3 the worst. Analyze this topic and its applicability to your situation and industry. Write up your analysis to meet the requirement of the industry you're operating in. Update the relevant section in your business plan.